We talked about the overall tech slump earlier. How much of this has to do with tech in general falling, and how much of this has to do with Bitcoin?
That is a really tough call, and I think about that question about the relationship between cryptocurrencies and traditional capital markets a lot, and I've never settled on a complete answer, except I'll say this, which is that if people thought that crypto or Bitcoin specifically or tokens were going to be some uncorrelated asset class that people will jump to in the event of a sell-off, obviously that hasn't proven the case. Now, we haven't really seen a panic, so to speak, in traditional markets, but it certainly hasn't been the diversifier that people would have hoped.
I do have a chart here in my GTV library. If you think Bitcoin is a bubble, just compare it to Bitcoin. Spencer, how would you weigh in on that question that I just asked Joe?
Sure. I mean, look, Bitcoin's down 75% this year and up 400% over the past 2 years. So I think time horizon matters a lot here. As to whether or not it's correlated with broader tech, I think the answer is probably not. And I agree with Joe. The idea that this is going to be an uncorrelated asset forever is not going to hold. It will become more correlated to particular things as it becomes more institutionalized over time.
That said, Joe, if the tech volatility doesn't let up, I mean, what other indicators can we look at?
Yeah, I mean, it's really hard to say and hard to figure out what's going on with the broader tech volatility. But there might be something to the idea that what we saw in 2017 and the first half of 2018 with tech in general, it was a function of extraordinarily loose financial conditions, optimism, and of course with all this stuff, and whether it's crypto specifically or even some traditional tech stocks, what you see is a matter of, in one light the story is fantastic and then the facts don't change, but suddenly a new light shines on the same thing and suddenly the same thing looks kind of ugly. And so, thinking about some of the tokens, think about the narrative that we saw last year with this new way of doing capital formation, this new way of organizing people that could beat regulations. And now we're sort of realizing that a lot of the old rules apply, that it's not so easy to circumvent the old rules, so to speak. So there are some similarities with the underlying facts staying the same, but suddenly a new narrative emerging.
Spencer wants to jump in here, I can tell. We're also seeing not just, a decline, but the fastest decline for Bitcoin ever, Spencer. I mean, how can you continue to back this whole industry given the negativity around it?
Yeah, sure. Look, I mean, I still believe that programmable money is a multi-trillion-dollar idea. So, I mean, look, we're in a bear market. We're coming off one of the biggest bull markets in all time, of all history. So bear markets do bear things, right? So we've had a ton of positive news over the past 6 months, and markets have continued to trickle down. We saw the opposite last year, but the opportunity is still gigantic.
So, what are you watching?
Yeah.
To detect whether there really is going to be a change, or if we're continuing, we haven't hit bottom yet.
Yeah, 100%. One thing I'd be careful of is conflating kind of all the tokens and ICOs that we've seen with Bitcoin itself. I think that from the outside, it's easy to see those as one and the same, but from within the industry, they're very different. And I'd say that, again, Bitcoin is really attacking this idea of programmable money, which is something that I think right now some people use because they have to, and I think over time more people will use because they want to, because it can do things that they can't do otherwise.
Joe, is that fair? I mean, obviously within the industry, there are very, specific stories, but it's hard not to look at the asset class as a whole.
Well, so I think Spencer makes a really good point that the story that the sort of Bitcoin argument that the Bitcoin bulls make is really different than a lot of the tokens. There's a difference between money versus people holding some sort of token with a potential utility to use in some sort of distributed organization. That being said, what I find really striking about the market right now is there doesn't seem to be any discrimination on the part of traders between good projects and bad products, or good projects and bad projects, money versus token versus equity. Like, everything sort of falls and rises on the same day. So if you look at a day like today, everything's down double-digit percentage or more. You go back to days where everything's up. So while it's certainly true that within the broader crypto landscape, there's a lots of different ideas, and we'll see which ones thrive and we'll see which ones don't. And probably the programmable money narrative is the strongest and furthest ahead. But it's hard to see in the market yet any sort of traders or investors expressing a real view towards one versus the other. Usually they all sort of rise and fall together.
So, Spencer, where are you putting your money? What are the parts of this industry that are going to thrive? And where do you think that there is overhype?
So again, I go back to, again, Bitcoin. I know that for a lot of people now, they've been hearing about Bitcoin for so many years, they want to find what is that next Bitcoin. And since the beginning of the time of Bitcoin, people have been looking for that next Bitcoin. I think that's a dangerous game to play. So again, money is a network effect type of ecosystem. Bitcoin does have the largest established network effect. It is more than 5 times larger than the number 2 crypto. And it is excelling at the programmable value use case. So we do continue to look for companies that are building on top of that and making this programmable natively digital value more functional.